Hey everybody, Chris Scott here. First off, I just wanted to say how great it was to see many of you guys at our Santa party over the weekend. There's nothing like seeing the kids, greeting Santa for the first time, and it was just nice to be in person again with people that we care about. So it was really nice to see you. Thanks for coming. And our team is already planning events for next year, so there's definitely lots to look forward to there. Now let's look at the market. Very interesting times in the Ottawa real estate market that not a lot of people are talking about. Late October, a lot of people felt like there was enough inventory for buyers. There wasn't as many multiple offer situations. Things were looking like it could be finally turning, more towards a balanced market. But really what happened was, the inventory that was out there, and you can see it clearly from this chart how low the inventory is now, it was absorbed by the market and not replenished. So there wasn't enough new listings coming to market, so it was really almost a tale of two different real estate markets within a 6-week period. Because now I look at the market and there's just not enough inventory, and agents, realtors out there are changing their tactics again. So we're going back to the no conveyance of offers until a certain date and time. Whereas, maybe 6 weeks ago we had, opportunities for buyers where they were not competing for properties. So it's a very fluid situation. What's going to be really interesting is to see what's going to happen next year when we have these prices that are already high and we have low supply. Are buyers going to pay a premium, for properties in multiple offers next spring once we get there with all these price increases that have already been factored in the market? If you look at just, year to date this year over last year, we're up almost 24% on a residential class property. That's a massive increase. 18.9% November of this year compared to last. Huge increase. So we have this inventory going down. We're going into next year, and people are talking about, well, maybe next year is going to be better. Well, I don't think so, because it always comes down to supply and demand, always. And inventory levels are low now. They're probably going to be low in the spring unless something major happens, and that's going to put upward pressure on prices like it always does. The X factor is going to be interest rates. Are interest rates going to rise enough where it's going to have an effect on buyers' affordability? Because if that's the case, then that might help matters and maybe stop things from escalating in terms of rising prices. Lots of questions that are going to be answered soon enough, but I believe that prices are going to continue to rise into next year. Most people are predicting at least 5%. I'm in that category where I think it could be even higher. And my opinion on that has changed just over the last 3 weeks because of the inventory situation we're in now. So lots to see next year, but for now I just wanted to say it's been a pleasure. It's been a great year for our team, and we're so happy to have such great clients to work with. I want to wish everybody a very Merry Christmas and Happy New Year, and if there's anything we can do for you guys, always reach out. Thanks very much, everybody. Take care.